Good morning, viewers. It's Monday morning, April 28, 2025, and I'm your host, Sunil Thakker, a Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest concise and precise stock market wrap with accurate figures and numbers. US stocks wavered on Friday, still finished higher, extending the week's rally to a fourth day as investors prepared for a slew of economic data and corporate earnings this week. The markets signaled a 4 day rally that was driven by investor hopes of a de escalation in the trade war as it looked for signs of easing tensions in the US China trade dispute. The Dow Jones Industrial Average eked out a meager gain of 0.05%, while the S&P 500 added 0.74% and the Nasdaq Composite rose 1.26%. With a 6.7% gain on the week, Nasdaq returned to positive territory for April, a turbulent period for markets. The S&P 500 finished the week 4.6% higher, while the Dow added 2.5%. The small cap Russell 2000 enjoyed its largest weekly percentage gain since November last year. On Friday, consumer sentiment data registered one of its lowest levels on record, due in large part to uncertainty around tariffs, though the measure came in slightly higher than a preliminary reading earlier in the month. The University of Michigan released its final take on April consumer sentiment, and while the index was upwardly revised, it was still at the lowest level since July 2022, and inflation expectations remained hot. President Trump has struck a more reassuring tone in recent days on trade, saying Friday the US is very close to a tariff deal with Japan. India has almost sealed its deal with the US. Markets had started the week under pressure with investors in sell America mode. That quickly morphed into a rebound fueled by hopes for a de escalation in Trump's tariff battle with China, plus his retreat from threats to oust Federal Reserve Chair Jerome Powell. Over the last few weeks, the president and members of his administration have been meeting with different countries to discuss bilateral trade deals. This comes after President Trump paused the implementation of so-called reciprocal tariffs for 90 days, providing a sigh of relief to markets and consumers alike. But the trade war is far from over, with Beijing saying it isn't in negotiations with Washington. Beijing exempted some US imports from its 125% tariffs, but denied Trump's negotiation claims on the heels of recent de escalatory statements from Treasury Secretary Scott Bessent, in the latest sign that the world's two largest economies are dialing back their trade war tensions, which have rattled markets for weeks. Top policymakers in China plan more growth supporting measures, including easier monetary policy, to shore up the country's economy. Of the 11 major sectors in the S&P 500, consumer discretionary and tech led the gainers, while materials suffered the largest percentage loss. First quarter earnings season has hit full stride, with 179 of the companies in the S&P 500 having reported. Of these, 73% have beaten expectations. But the investors are largely looking past results and parsing forward guidance, particularly lowered or pulling projections due to economic uncertainties and dampening consumer spending. And analysts aren't sounding the all clear for markets, cautioning Trump's tariff policies might have done long lasting damage to US credibility with overseas investors. Meanwhile, Alphabet stock rose, pushing the tech heavy NASDAQ higher. The Google parent late Thursday posted strong gains, though it warned of a slight headwind from the end of the de minimis trade loophole. Its shares advanced 1.7% after the Google parent posted a 28% jump in Google Cloud revenue and assured investors that its AI investments are paying off. Alphabet announced a dividend hike and a $70 billion stock buyback. AI chipmaker Nvidia rose nearly 4%. EV maker Tesla jumped nearly 10% amid optimism that the entry into Indian market is near, and as the US said, it would ease rules around self-driving technology. This week, several Magnificent Seven companies, including Amazon, Apple, and Meta platforms, are due to report. Elsewhere in tech, Intel fell 6.7% after reporting a quarterly loss. It weighed on the market after the chip company warned that trade turmoil could push its costs and could chill investment and spending. Shares of oilfield services provider SLB dipped 1.2% after the company missed first quarter profit estimates and warned of a potential industry wide shift due to economic uncertainty and tariff risks. Eastman Chemical fell 5.9% after it gave a forecast of profit this spring that fell short of analysts' expectations. CEO Mark Costa said that the macroeconomic uncertainty that defined the last several years has only increased, and the future demand for its product is unclear given the magnitude and scope of tariffs. Skechers USA, the shoe and apparel company, pulled its financial forecast for the year due to macroeconomic uncertainty stemming from global trade policies, even though it just reported a record quarter revenue of $2.41 billion. Its stocks, however, fell 4.3%. Charter Communications jumped 11.4% after the broadband and cable company beat revenue estimates and added more subscribers than expected. T-Mobile tumbled too, flagging the early effects of the tariffs. In other Friday trading, rising expectations of an economic slowdown in the US this year continue to drag Treasury yields lower. The 10-year flirted with the yield of 4.25%, closing the week at 4.267%. The dollar index rose while the Japanese yen weakened. Gold futures pulled back 1.5% to finish at $3,282 a troy ounce. Financial and political uncertainty sent the precious metal to record highs earlier last week. My take: we are in a headline driven market. One headline screams elevated uncertainty. Another cries Trump's tariffs are more likely to hurt growth than spur inflation. One more looming signs of unease. Words like whipsaw, roller coaster, flip flop are strewn on the terrain of a fall garden. Continue to expect very volatile headlines going into this week and next week and the week after too. This includes the potential for explosive moves in either direction. And the market will be prone to volatility spikes and outsized trading ranges in both directions. This is likely to remain that type of market until there is at least some clarity on what's going on. In all this, how do investors in company think straight? Several companies caution that uncertainty created by the tariff trade war is making it difficult to give financial forecasts for the upcoming year. And as traders wade through the latest batch of earnings, signs of unease about economic prospects are becoming more evident. However, the 90-day pause demonstrates that the president is well aware of how tariffs might be negatively impacting market activity. President Trump is firm that the sharp U turns are all part of a long term plan to force allies and adversaries alike to strike trade deals with the US, and that he remains steadfast to follow through on his pledge to reset global trade. And while a lot of people are just kind of throwing darts in the dark, as there are still a ton of questions around tariffs right now that are really unanswerable, one cannot ever question this veracity that the only interest guiding President Trump's decision making is the best interest of the American people. We are in a headline driven market. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will see you again tomorrow morning. In the meantime, be investing, stay inspired, and remember, it's all about money.